Alright, welcome back. Let's talk about the stock market. I'm going to talk about the news first and sort of fundamentals, and then we'll get into charts. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. Do not invest anything you're not willing to lose or lose sleep over. Do not use margin. Do not over leverage. I don't even know if limit stop orders are a good idea or not, but let's talk about the macro. These are just my opinions. So my last market video, I was short, and that was pretty good. But I took profits, or hedged my portfolio, but I took a little bit of profits. And the market rebounded overall for all equities, and that was pretty much because everyone who was short, they covered their shorts, and then I guess the war narrative cooled down, like the U.S. isn't really going to do anything except threaten endless sanctions. But I'll talk more about the sanctions because it's like shooting yourself in the foot. But yeah, the trade on volatility was great, but then sharply sold off, and it always does that. You have to be on your toes. So let's talk about the news. Let's get into that real quick. All right, so busting the myth that the Fed can control or predict the economy. I mean, we all know that. The world's largest oil trader warns energy markets are underpricing supply risks. I think I have that article up. No, I do not. Well, I'll talk about it a little bit. So the supply chain issues prior to the Russian invasion were already there. So there were bottlenecks all over the world. The sanctions just made that a lot worse, right? And all the red tape and not renewing the oil leases and the pipeline with the current admin in charge in the U.S. at least. And then Europe's sort of similar. They're like just going full head tilt into green renewables or whatever. I don't know. It doesn't exist, guys. It doesn't. There is no going off oil. The technology is not there. The return on the EROI, the energy return on investment, to fund these renewables and for these renewables to be more efficient than the current oil-based petro system does not exist. And then on top of that, they're doing carbon credits, which hurts energy producers even more. And then on top of that, supply chain issues from the 2 years of lockdowns. And then on top of that, now we have sanctions, and the global, just on time globalization era is coming to an end. It just did, with sort of the West versus the East, and they're not going to trade all that much energy with one another because essentially the West is the East, so like Russia, China, Saudi, they're undercutting the West. So the West just became Europe, and the US is not energy independent. They're relying on the East, and then the East is like, screw you, we're not even going to use your currencies, we're just going to trade more so amongst ourselves. And that's really bad for what was left of the petrodollar, which is bringing on a real financial global reset of like the East is the superpower in general, with the One Belt One Road initiative and the Eastern Hemisphere trading, being the dominant in trade for energy, commodities, and Russia just pegged their ruble to gold. I mean, this is like checkmate. Meanwhile, the U.S. is what? What's our strength? I know what you're thinking. What's our strength? Mental illness? Is that what we're exporting? Is that our top export? Is that what we have reserves of? Is mental illness? Pretty much. Not everyone, of course, just like half the population. But don't worry, the pendulum will swing as hard times come, and they will. It's going to be bad. And I just, gotta prepare. Self sufficiency. That's what you gotta do. And be invested in the right places, right? Let's see some of the articles I was reading. Bear traps. This is not about the 2s, the 10s. There's far more going on. We see 2030s near term downside. When we think about the hard assets versus financial assets debate, clearly we can see a first, second inning shift in play, but what takes the trade to the next level, we still have not seen even the slightest indication of real financial assets selling. Yeah, equities are like 10% away or down from the all-time high, like on average across the board, something like that. Commodities have broken out in the past like 3-4 months, but we haven't seen anything. That's just the first, breakout. We're gonna go into a super cycle, and what that's gonna do is, it's really gonna blow up the bond market. That's what I see. And what this article is saying is, this is by Larry McDonald, author, Bear Traps Report. We are not sure the risk reward has been meticulously thought through here. The risk of self-inflicting wound are sky high, and complacency around these risks is even higher. Yeah, it's weird because the Fed is raising rates. Commodities are about to go into a super cycle, yet everyone bought the dip on equities that are overvalued, and technically, I guess, QE has ended. Not really, but a lot of it has. It makes no sense. This is absolute complacency. So these are the charts I wanted to show. What is the state of play, you ask? We have U.S. equity market that has been led by utilities since late November. The S&P 500 over the same period. A consumer staples XLP for nearly 5 months now. So the ISM manufacturing index is trending back down again. So that's slowing manufacturing. The Fed has to convince the market of what? Man, I don't know. The Fed has to convince the market that inflation is temporary. It's not going to go higher. And while at the same time not allow equities to fall too much, because then they can't reinflate it without causing hyperinflation. But at the same time, we have supply chain issues and energy. Again, we don't have energy independence, and there's external factors here, like the rest of the world saying F you to Europe and the US, pushing the value of their currencies up and pegging it sort of with commodities like gold and energy like oil, which technically in the long run here is going to really hurt the dollar. And then that's super inflationary. On top of that, the US runs on gasoline and oil. Like the gas prices are going to go through the roof possibly. They can't control that. The Fed can't do anything about that. And we're already tapping into our reserves and probably going to use them all up. And then once it's used up, and why is it being used up? It's literally for the next 6 months because of a huge election coming up. But after that, it's like, it's game over. I mean, we have no reserves of oil. Apparently, we shut down our own oil production, and the currency, which is the only thing left holding up this entire house of cards, is seriously being used less globally, and everyone's starting to shift over to the Eastern empires because their currencies are backed by real things like energy, gold, commodities, manufacturing. They have all the manufacturing. We depend on China's manufacturing. Our agriculture, so the US is known as the breadbasket, but at the same time, apparently we import like most, or like 70%, 60% of fertilizer. And Ruskies are about to cut us off on that too. This is like the perfect storm for like the collapse of the West. Europe's got its own issues with natural gas and energy and oil and gas because they're completely dependent on Russia. So all these sanctions was literally like, I'm just gonna shoot myself in the foot and say, haha, I gotcha. that's what our fearless Western leaders are doing. Like at this point, it can't even be this incompetence. It's at the point where they're literally destroying the West. I believe what you may, but we're effed. I mean, this admin. Oh yeah, I didn't even pull up that article, but last week they were talking about a 5.4 trillion. Of course, they're going to come out with a huge high number in the beginning because then they want to meet them halfway, and it'll come out to be like maybe 3 trillion. Does it even matter? That's super. That's like adding rocket fuel to the inflationary fire already burning in the U.S. But they have to do it because. But the problem is, it's for like starting green renewable energy startups, which is just burning the money away and pretty much giving it out to their not constituents. I almost said the wrong thing. Their lobbyists, right? I mean, the country's being plundered. Just like with the PPP loans, that was plundering of the nation. Trillions of dollars went to small business owners, mid-tier and large business owners who didn't need the money, but they took it because it was plundering. While the ship's sinking, might as well take what you can, right? That's pretty much what happened. I ethically did not. And I know accountants who are like, you need to just take it. Nothing will happen. You should take it. They're just giving you free money. I'm like, no, I'm not making a deal with the devil. So, yeah. Yeah. I'm not going to get into treasury cash balances and all that. It doesn't matter. But the consumer sentiment does matter. So the consumer sentiment conference board consumer confidence spread. This is bad because consumer confidence is just plummeting like to below the dot-com bubble crash levels. It's already below 2007, 2008. Why is that? Because people in the U.S. are hurting real bad financially already, from the high gas prices, from the high food prices, from the high utility prices, homes, real estate in a bubble. Everyone's finally feeling the pain. Those stimmy checks were not free. That was a temporary sugar high, and I talked about that when it was happening. I'm like, this is going to be massive inflation in about a year. There is a delay, and I talked about it. No one should be surprised, and now we're starting to feel the hangover, right? And it's just getting started. I mean, the inflation we're feeling now is from Trump era. We haven't even gotten to, because QE's been running for 2 years now since the wicked flu came out. And 40 to 60% of all US dollars were printed into existence within the past 2 years. We're probably going to see hyperinflation, especially if another bill passes for 3 trillion or 5.4. But you have to understand they have to do this because they have no choice. So hyperinflate the debt away and use the dollar to rebuild energy independence. And they should be rebuilding manufacturing and just pumping money into allied trades because most Americans don't make anything. They don't have real life skills. They work in cubicles or whatever the hell they do. I don't want to say certain. You guys know what I want to say, but I can't. And that's going to happen because, I mean, pitchforks are going to come out, man. I'm telling you, like, by the end of summer, or by the end of this year, I don't know where gas will be. I don't know where a barrel of crude will be, but I would not be surprised, $200 a barrel of oil. Even with the strategic reserves being used up. That's how crazy this might end up being, and probably will. I mean, Taiwan hasn't even, been taken yet. I want to talk about this a little bit. I'll talk about this later. A paradigm shift Western media hasn't grasped yet. The Russian ruble relaunched linked to gold and commodities. This is the most important thing that has happened in the past week, and mainstream media is not even touching it. That's how you know it's important, and you should care. And it's a big deal. I mean, we've talked about this for over a decade in the private group. I've mentioned it in videos. I'm like, that's going to be like the ultimate checkmate move. And it is. They did it. So we were doing the math. It's like $1,866 worth their peg to gold, the ruble. But that's going to change over time. So the ruble is going to become more powerful as the price of gold goes up, which makes me wonder, what manipulation is the West going to do? The final last big manipulation play to smash gold, to buy them a little more time, and so that maybe they could load up and the US banks could load up. We're going to find out in the next few months, or month, or a few weeks. Yeah, this is what I was talking about. The S&P shorts fully covered amid macro fatigue, downside hedging flows return. Just want to show you guys that. Russia threatens to limit vital exports of agricultural products to friendly countries only. And there was a picture, that'll come up here in a little bit. I'll show you guys when it comes up. Kathy Wood. This is what happens when you bet on, she was literally on CNBC, like, I bet on the NWO stocks. That's funny. That's great. I warned on Twitter, I'm like, at the all-time highs, I was like, I can't wait for ARK to go under. And it's funny because it's named ARK, right? Like Noah's Ark or something. Trust me, they think about that when they name stuff. But yeah, this thing's wrecked. And good. Should be. She basically bet on all the, bubble stocks. All the FANG stocks. The only one that's performing for her is probably Tesla. But yeah, I mean, it's down. And this might be the Lehman one to look out for. When ARK goes under, that's when the Fed will capitulate fully and do infinity QE until the dollar is confetti. Because the fund is pretty big, but there'll be other funds too. What else? Oh, here's the map. Here are the friendly, so this is the Eastern Imperial, and then here's the West in red. Or the non-friendlies to the Ruskies. Technically, these are neutral. And they are, but I don't know about India. I don't know. We'll see. I mean, they don't, but they might end up just trading with China and Russia just because of the trade routes, and it just makes more sense. They benefit more by doing that, even though they don't really like each other, but at the same time, it's like, sometimes you do trade with for your own benefit, right? So what else? This is crazy. German retailers to increase food prices by 20 to 50% Monday. Just like that. Boom, overnight. If you're in Europe, you might want to go and load up on food now. And I'm talking like, maybe start, if you haven't prepped, you should be prepped by now. You should have a year's worth of food, but if you haven't, this would probably be a good time right before they increase prices by 20 to 50%. Again, in case of the worst case scenario shit hit the fan, getting canned meat is a good idea, I believe. And then, of course, your big bags of rice, and it's just, you guys know what you're doing. You should by now. What else? Jamie Dimon warns of U.S. faces unprecedented risk from combo of inflation, war, and COVID. Yeah. Basically, he's saying, this looks bad, guys. Really, really bad. And they do say the truth, I mean, sometimes, and they warn. So they can say they warned everyone, right? This is a big deal. U.S. factory orders tumble in February, biggest drop since April 2020. Lockdown collapse. That's bad. So factory orders are orders for goods, right? Well, that's really bad because what manufacturing is left in the U.S. they're not even selling anything to outside the U.S. and within. Really bad. EU preps new Russia sanctions, basically on a suicide path. What else? Cold snap sends French power prices to 13-year high. Europe's, I think Europe's in worse shape than the US right now. Their inflation's actually higher. You could imagine. That's insane. That's crazy. In Europe, it's a real densely populated area. Everyone's just stuck in these miserable cities, all poor. It's going to be rough there. Do stock splits create value? A little bit. They're really talking about the AMC had another stock split and then the stock rallied because those Reddit retards, that's what they are, don't understand that a stock split doesn't mean anything. They're just you're just getting double your shares or whatever the split is, the ratio is, because the price of the stock is high, so it's less appealing. So was Bitcoin more appealing at $10 or at $50,000? I believe it's more appealing because of unit bias at $10. So that's what a stock split is. That's all it is. So it does create a little more value. It might entice people to buy more shares because they feel like they're getting more for their money. It's just psychological. So like every time there's talks, or it seems like the takeover, in Ukraine is going to end, or it's coming to an end, the market kind of rallies, but they're missing the sanctions aren't going to really be taken away. I think we've been under this globalization system for decades now, and that's what has broken now. And that is the fundamental fact of why equities should seriously plummet, on top of rate hikes, on top of less QE, on top of commodity prices so high, which is not even priced into the profits and the revenues of all these corporations. Although temporarily, balance sheets and earnings statements coming out look okay, and so does some economic data because people are spending more money. The problem is they're getting less for their spending. So everything costs more now, so it looks like spending is up, that's what they base good economic data off of. But spending is up, but that doesn't mean people are buying more services or goods. They're buying less. They're just paying more for the same amount that they've been doing. So technically, goods and services being sold and in the economy is dropping, while the money velocity to buy the same amount or less is going up, which is essentially stagflation. Elon bought Twitter, which I think is cool because Twitter is, guys, I mean, the latest algo running on there, really bad. I can't get any traction. It's hard to get traction. Maybe it'll get a little better with him. And so far, I mean, there's a lot of alternatives, but yeah, you got to get a decent amount of users from the legacy social medias to onboard to the alternative, right? And we haven't seen that for anything really. And I don't want to even say certain things because of the current one I'm using, which is also, everything is chateau banned and suppressed. That is why you guys need to share my videos. My channel doesn't grow. It's only going backwards. And eventually I'll just stop doing this because if no one's listening, you're on your own. I've already made it. Like, I'm going to be fine. Yeah. All right. Global deal-making activity plunges to lowest level since pandemic as SPACs face heightened scrutiny. Yeah. Is it still a bear market rally? I believe so. Until Powell capitulates. Then you could say we'll go back up to new all-time highs and the stock market will go into a hyperbolic blow-off top bubble Venezuela-style stock market. But man, is inflation really going to take off with the stock market. This is what they're going to be saying on CNBS. If you're not in the stock market, you're getting poor. If you're not in cryptos, you're going to be getting poor. If you're not in metals and commodities, you're going to be getting poorer day by day. Like, So the average person is just going to get decimated, and everyone will be forced to be an investor. And equities will be the riskiest thing. Bonds, you'll be annihilated. And cryptos and metals and commodities, that's your ticket to making it. What else? 18 to 34-year-olds want more free money. Yeah, because their future's gone. And I get it. I mean, if you're young right now and you're like trying to get a job and they barely pay you enough to even go back to your job because gas is so high, food's so high, you can't make rent. Rents are up across the board, and it's almost that like, what's the point? You're a slave now. And that's where all this anger comes from for older generations like the boomers, and then of course the class warfare that's gonna only increase, and understandably so, right? Which I do have a article for that. Did I not bring it up? Oh, here it is. So, wealth effect monitor in the Fed's monetary printing era, household wealth. Top 1% is this red line. Their wealth has gone straight up, right? Again, I talked about all the PPP money and all that. The stock market going up for the past 2 years because of unprecedented amount of money printing because of a wicked cold season, right? Which was basically what that was. Is they stole everything before the ship sank. I'm telling you. All right. The top 2 to 9%. These are just entrepreneurs and people who basically have like, how much was it? So the top 1% of household in red is 36 million and above. The top 2 to 9%, yellow, which is right here, they have around 5 mil, somewhere around there. 5 mil to like 800,000. I don't even consider these people 1%. They're just entrepreneurs with small to mid-tier businesses. They're the ones the economy runs on. The economy runs on their back. All right, the next 40% of household is purple. It's all the way down here. It's slightly going up, but barely. These are the people with McMansions and all the boomers. They're around the 775,000 assets and wealth, something like that. And then the bottom 50%, which is green, which is like most people, right? It's flatlined, meaning inflation's just, and you're around 59,000 a year. That's how much you're bringing in. Yeah, they're just getting poorer day by day. So retail freight and now semis are all on the verge of recession. This is actually very scary because let me read this. All right, the call, which took place after the close on Wednesday, sent RH stock crashing and unleashed a pall over the broader retail sector. However, the recession blues quickly spread just 48 hours later when Craig Fuller, the CEO of FreightWaves, a supply chain logistics expert and hardly the hyperbolic type, warned that the freight recession is imminent. Commentary which sent the transports index plummeting on Friday, which continued to depress the space on Monday as well. All right, so semi-trucks, trains, hauling goods, they see a recession. They're not getting as much orders. They're not shipping as much. On top of that, fuel prices. I've shared videos on Twitter of semi-truck drivers like showing when they're pumping up, it's like $1,500 per every time they stop to fuel up, and that transfers to all the goods being shipped. That price increase in gas, right? Also, last week, the chairman of Taiwan Semiconductor said that consumer electronics demand is showing signs of slowing amid geopolitical uncertainties and COVID and all that. The slowdown emerging in areas such as smartphones, PCs, TVs, especially in China, the biggest consumer market, which is crazy. It's also happening in China where they have less demand. And for some reason, they're like doing crazy stuff over there, like locking their people down again. We're going into a global recession, which will be like Japan in the early 90s. It'll be a stagflationary depression, never seen before, where it's the Great Depression mixed with massive inflation, which is worse than the Great Depression, but probably globally. And then, of course, things are going to probably go kinetic. They just are. Because that's what they want. It's in their plans. Yeah. What else? More sanctions were announced today as well. All right, I think I'm almost done with the news here. Exxon says Q1 profits could be $2 billion more than Q4. It's funny. I am looking at these stocks and energy stocks, just waiting to see if this is the right time to buy the dip. Yeah, that was about it. All right, let's go to TA. The VIX is down. I'll be looking to hedge my portfolio again. Actually, I did buy last Friday. I didn't think it would dump one more time. You're never going to time it exactly right. But, I'm almost break even. I literally bought that bond in the private group. Let's look at the dollar. Looks strong, right? Looks strong, but is it? No. It's not, because none of the currencies are strong right now. Commodities broke out across the planet. I think the top's in for the DXY, unless the stock market really takes another it actually crashes somewhat. Like a huge correction in the stock market might send the dollar a little higher, which will further reduce inflation temporarily, maybe for 6 months, and it's probably what they're looking for, right? So, and what I mean by that's what they are looking for, I'm saying, like, if they're hypothetically, if they were sort of manipulating the markets, I mean, the central bankers are literally doing that. And if they wanted the DXY higher, then they have to let the market fall further back down. That 20% correction, which I was predicting at the end of last year, came true. Now the equities rebounded, but guess what? Inflation's still up, still high. They gotta let it dump back down again for the DXY, at least, to like get a little pump rally going and break above the 100 basis point here handle. And it is testing the 100 handle a lot, right? Like it tested it. Let me show you guys, learn some TA. Tested it here, broke out, false breakout here, another false breakout, tested it here. Okay, well, you could do the same for the bottom, right? This channel, let's put it around here. On the bottom, to the downside, it kind of tested it here, false breakdown. Tested it here, false breakdown twice. There's more. It's been testing the top range more than the bottom. And if I had, if I was trying to backstop the dollar during these times of change globally, I would want the dollar to break up higher on the DXY at least versus other currencies globally, because that would buy the dollar more time, and then it's more of a cushion for the central bank for the US. So what I would do is I'd let the equities crash again, or at least correct heavily, and basically making here's the Nasdaq, basically making this a giant bull trap, right? This would be a bull trap, and then boom, like huge dump. That would send the DXY, the dollar, going up as everyone piles out of stocks and goes into the dollar currency as a knee-jerk reaction, flight to safety. And then they will, so let's say in this, the next rate hike is around here. they do the rate hike, and the economy's really struggling, and something blows up. Taiwan's taking something, and then the sanctions, the supply chain, everything has been waning, and the house of cards can't take it anymore, especially a 50 basis point rate hike, and the repo market's doing its thing again, and then the market just takes a huge dump. And then Powell comes out, and they have some sort of excuse, and then they pass the 5.4 or the 3 trillion infrastructure bill, and then they cut rates and then do more stimulus, and then the market rebounds. But before the market rebounds during this fall, the DXY, right, broke out above that 100 handle, right? Where would it shoot? I don't know. This would kind of be like that milkshake theory thing, but not really. This is more the next like month, it just shoots up, and then there's resistance at 106, and then the dollar falls back down, maybe back into the range when Powell capitulates, probably in a couple months or a month from now, and then that's perfect for elections in the summer, and then the trade sideways in here. But during this entire time, when when Powell capitulates, commodities are going to go through the roof, I believe. This end of spring, going into summer. So basically, last year I was a year early to all this playing out, but I'm very confident this is going to play out this year, because we're in the quickening. Everything's happening quicker. All right. Let's look at the bond market. And it's because of the bond market as well. The bond market's already signaling a recession, right? The 10-year it went up to, it hit 2.5. Where's my bond? So let me show you the dynamic yield curve. Here's the 10-year right here, right? Well, the 30-year is almost in line with the 10-year, the rates on the 30-year. Because who would hold a 30-year bond? I don't know. Who would you hold a 20? I don't even know why the 20. Anyways, who'd hold any of them? But the 10-year is below the 7-year, the 5-year, and the 2-year now. Basically inverted yield curve. And now, historically speaking, everyone's like, oh, well, we have 8 months to 17 months of bull market before, because that's how long it takes for it to play out after the yield curve inverts. Well, you know what? I think it's been shortening, and I think this time around it's going to happen much sooner. Like soon, like in weeks or something. Because the bigger the bubble, the sooner it pops after the yield curve inverts. The dynamics, because the more malinvestment there is. So the more malinvestment, the bigger the bubble. Corporate bonds, everything, real estate, everything, credit cards. And inflation's running hot, so it makes it even more fragile, on top of supply chain, gas prices, you name it. So this time, I believe, when the yield curve inverts, which it inverted like last week, it's just going to happen soon after. Why risk it? This might be the biggest, the big one, where the market just has the biggest crash ever, like the 1930s, right? And it just doesn't come back for decades or something. Kind of like Japan, right? That's what I'm thinking. Here's all the indices. They've all rebounded fairly well. Not the Russell 2000, which is more domestic and mid-tier companies in the U.S., which is a huge sign of weakness, in my opinion. The Vanguard World Stock Index, it rebounded, but it's trying to break through this moving average on the 3-day chart. Let's take a look at the weekly. What does that look like? It's got a moving average right above it at 103. Right now it's at $102. So I think it will get rejected and then back down. On the daily, the FANG index will be testing the 200-day moving average. I do not believe it'll break above it. It's going to test it and then get rejected and back down. And that's this one over here. Here's the FANG index. And then here's that Vanguard World Stock Index on the weekly. We got the 50-week moving average. And then I drew this last time. This looks like just a bearish pennant, a bear flag. It should, the Nasdaq should get rejected like this week and then back down. That's what I'm thinking. I could be wrong, guys. Maybe it does just keep going higher and makes new all-time highs, because nobody in the stock market has ever seen inflation or a real, well, I don't know. They do this survey where like most people on Wall Street are like age under like they're like 28 or something. So they saw the great, they saw 2008, 2007 recession, but they were like in high school or something. It's not like they were in the market on Wall Street. All right. Bitcoin, I believe, will be taken down with the equities market. Also has a bearish pennant, bear flag, and they're also doing their BTC Miami conference. Here's like crude oil futures. It did this, right? It fell, but I believe it's still going to go retest that 92, because an equity, if the equities sell off again, I believe it'll take oil down with it, because it'll be signaling a slowdown in the economy, less traveling. By the way, whenever I drive around, there's definitely a lot less people driving around these days. You can see it. I pick up on patterns. That's what I look at all the time. That's my Superman skill, is pattern recognition, and I look at that in the world as well. I also, I get a good tap on inflation with energy drinks, because I buy them like nonstop. I drink way too many. It's like the price increases, sales go away, and then like a few months later, price decreases and the sales come back. But every time there's a new sale, the price is higher than the previous sale. So it used to be like 3 for $5. Then it's 2 for $4. Now it's 2 for $4.77. And then the price will probably go up again, and then they'll do another sale and it'll be 2 for $5. And this is what I'm noticing, because they can't really make the cans smaller, because everyone's used to the 12 ounce, right? So, but with everything else, with food, it's like, it's either I'm turning into a giant, or the food in the stores is becoming smaller and smaller and smaller. You're getting cereal boxes, they used to trick you with bigger cereal boxes but the same amount of food or less. Now it's just everything's shrinking. Like peanut butter and jelly, like they don't even have regular size like they used to. It's like small now. All right, here's oil. Also, another reason why I do think gold is going to go back down, although I am playing with fire at this point, because let's face it, I mean, Russia just pegged their currency. I mean, China does it. I don't think it doesn't matter what oil does or equities in the short term. It's just might break out and just keep going. We'll finally see the manipulation end, and they just can't stop oil or gold and silver from just making new all-time highs and just going to who knows, right? And then Schiff will be right in the end. But yeah, this purple line is oil, the WTI futures. The candles is gold. So I'm expecting oil, one more drop in oil, nothing too significant, and then gold will drop. And I'm hoping gold drops to like 1880 or somewhere around there, and oil will drop down to like $92, and then boom, it'll shoot up, and then metals will just shoot straight up at the end of spring or early this summer, whenever Powell capitulates and that new spending for infrastructure Green Deal shit passes, right? That should shoot both of these higher, and then after that, guys, you have to have everything in place and hunker down for like massive inflation and just crazy chaos. It's going to be a rough summer, late summer, and whatnot. Although what they're trying to, so it's weird, right? Because they want people to falsely believe that everything's fine this summer. And I don't know how they're going to do it without inflation. I believe gas prices will probably stay around where they are right now. And then they'll stimulate the economy with, I don't know, they might send out checks. I don't know what they're going to do. But by just capitulating, by the central bank capitulating, right, and Powell capitulating, how are they going to get money into people's hands? To the voters' hands, to the mob's hands? They're just straight up going to have to do some sort of UBI or something. That's what they're going to have to do. Because if they don't, it's just going to go to the rich again and into the stock market, which is only the boomers, which is a small percentage of the population or less. It's like 18% or something. And then the 1% and what is it, the 3 to 9%, something like that. It's the 2 to 9%. The chart I was showing earlier, the 2 to 9% and the 1%. So they have to get the money to the bottom rung, right? People who are really affected by all this inflation and gas prices. People who go to a dollar store where they can't buy anything for $1 anymore, right? So here's gold on the left. The monthly chart does look bullish. The candles do. Because look, we had a 1, 2, 3 count with the TDI here, and then the 4 and the 5 count. Technically, next month, we're going to get a 6 count. So now, if gold doesn't break below 1900 again, I mean, man, May is just going to be a 6 count, and then it's going to like over 2000. It's going. So I'm hoping this month it quickly breaks down to like 1800 or something, and then you'll get the 6 count back up and 7, 8, 9, taking you to new all-time highs over the previous last all-time high. But I'm kind of playing with fire here. Gold might just hold up this time around, and I hope not. I want it to fall one more time so we could load up, but yeah. So its previous all-time high was at 2091. Right now it's at 1930. Come on, like they need to manipulate it back down. At least get it to 1870, and then you'll get that 6 count, 7, 8, 9 to the upside, which could just shoot it to like 2200, 2300 real quick. So we're at the end game of gold breaking out and never to return to these prices ever again in our lifetimes. Escape velocity. But I'm just hoping for one more dip, and I mean dip. Let's look at the 3-day chart. I don't know, 3 days isn't really telling me much. It looks like it could just fall down or just break up. It's not much I'm getting from this chart. So the daily, I mean, yeah, it's consolidating these light blue candles. Maybe a little more downside for a few more weeks, but I'm not really getting too much of, TA's not telling me much on the daily. The 12-hour looks bearish already. I've got a reddish Shimoku cloud. The yellow bars mean overbought. The RSI is still kind of high in the center. Should drop some. My other oscillators are telling me it should drop one more time. So maybe you have 2 weeks. Maybe in the next 2 weeks we see a nice dip down to like 1860 would be amazing. But, you know, another retest of 1900 at least. And then after that, you're really playing with fire because it could break to the upside. So maybe one more test in 1900. Worst case is like 1860. And that would be your ultimate buying opportunity. What would cause that? A nice dump in equities. Like a nice another, dump. So our equity is gonna fall. Well, here's ARK Innovations in the center. Here's Meta, used to be Facebook, on the right. Tesla's over here on the left doing great. It's rebounding, getting real near all-time highs again. Dead cat bounce on ARK. Dead cat bounce on Meta. Tesla looks alright. It's probably going to benefit from their Green Deal infrastructure bill they're trying to pass. Let's take a look at the NASDAQ. Again, I've sort of touched base on FANG and the equities. I think this is a bear market rally. Like, this is the return to normal, what people think, and then we're going to get a correction. Now, when I say Powell capitulates, will that send equities back into a new all-time high bull market and just make the market go straight up like Venezuela? Not necessarily. I actually don't think that's going to play out. I think when they capitulate, it'll just get equities to kind of trade sideways, but not really crash. That makes sense. Oh, here's uranium. It's been doing amazing. My uranium stocks have been performing the best in my entire portfolio. Like 5-10 baggers. It's up 200% from April 2018. Okay, so I didn't hold on. This is just the metal. It's not, it's just the metal. It's not the stocks I'm holding, right? So I bought back in 2020. From 2020, March 2020, I was buying around there. It's up 148%, or went up 148%. That's huge for the metal itself, because that means the refiners, the companies mining it and refining it, they're making bank, right? And it's probably gonna make new all-time highs, because energy is too expensive globally. And eventually, I mean, they're going to make new nuclear power plants. Gates is building them, trying to, so, hey. And I'm not a fan of them, because I do think there's other means of hydroelectric power plants, but, you know, I don't want to get into it. Natural gas exploding higher because of the sanctions. Agriculture, it's been doing amazing. It's like one of those core positions in your portfolio that you just hold. It keeps your portfolio nice and balanced, especially if you have margin. That's what I do with it. It's gone up 73%, and we pretty much caught the low in the private group we bought in 2020. There's a guy in there, he's been trading for decades. He's been on Wall Street, so he made that call. It brought my attention to it, and I'm like, awesome. So that's been good. Alright guys, that's pretty much it for now. I think we'll end the equities might end this week higher, but next week or the week after, as we get closer to the rate hike decision, it's going to start correcting. Or it might start correcting tonight, tomorrow. Let's see what futures look like. Futures. Well, commodities are in the green across the board. Interesting. The VIX is up. Equities are red, so it might start tomorrow. Where's gold? Oh, look. Gold and silver and platinum in the red. So the monetary metals, I believe, are going to drop with oil and crude and equities. But overall commodities that are needed for people to live off of and energy are just, it's hard to make them go down, because the West is not, they don't produce their own energy. So and then with all these sanctions, what it does is creates more demand and there's less supply, so it's just going to go up, right? Where's crude? Is crude not here? I don't see it. Alright guys, smash some likes, join the private group. The link to the website is below the video. Leave anything in the comment section, it helps. Follow me on Twitter. I'm very active there. I'm posting all day. Follow me everywhere. I'm everywhere. Alright guys, links are below the video. Until next time.